Hello everybody, it's Doc here from OnTheMoneyOptions.com and Coastal Capital Management. In this private briefing, I want to talk to you about what happened yesterday, June 25th, and tell you about a process I fondly refer to as bang it to buy. First of all, I'm going to let you in on a little secret. The big boys, as I call them, the institutional traders, have been known to take advantage of the market. Now, some people will call that manipulation, but let's just say they are opportunistic. I'm going to take you through a 5-minute chart of the exchange-traded fund SPY. SPY is designed to replicate the S&P 500 index. This will give us a broad look at the large cap market at 5-minute intervals. The first thing I want you to notice is the pre-open time frame. This period represents trading prior to the open of the exchanges. Most of the time, if something bad is going to happen to the markets, it's already happening pre-open. But you can see that not too much is going on until the exchanges open at 9:30. In the first 5 minutes, you see the price is stable, and the volume bar at the bottom of the screen is green, indicating this interval traded up. The second 5-minute interval is a different story. You see the price bar drop significantly. Now here's where it gets interesting. Notice the second volume bar. The volume bar in the 5-minute interval drops. The next few volume bars are below average for the open on normal days. From 9:30 until 10 a.m. the price falls steadily, but on relatively small volume. This first 30 minutes of the market is what we refer to as the opening range. The opening range will often set the tone for the markets that day and will quite often contain the close. The price action yesterday is most likely attributed to algorithmic trading. Huge computers are searching through mountains of information every second. Many are even programmed to look for keywords that may affect the market positively or negatively. When these algorithms kick in, they oftentimes set off other programmed trading. You may recall the markets opened yesterday on talks about a trade war with China. So the markets open up and the trade war is the talk, and the markets go down, but they go down on light volume. There doesn't appear to be much conviction in the move. If it were so, the markets would go down on increasing volume. Now let's shift our attention over to the 3 p.m. time. At this hour, the administration sent out a spokesperson to deny claims that the U.S. was intensifying the tariff battle directed at China. You instantly see the S&P reverse direction on increasing volume. As a matter of fact, the largest volume bars of the day. And here is another strange outcome. The close is within the opening range. It's funny how that happens. Let's look at the 5-minute chart today. The dotted line near the bottom is the previous day's close. Before the exchange is open, the price is moving up. The open at 9:30 has a blast of volume and the price moves up steadily during the day. Now let me add a couple of new pieces to the puzzle. The end of June represents the end of the second quarter and the end of the first half of the year. These are benchmark moments when the second quarter and first half performance is measured for actively managed funds. This may affect where the market closes at the end of the month, but we'll discuss window dressing in another video. Fund managers and big institutional traders may have taken the opportunity to push the market down so they can accumulate shares of stock and squeeze out a bit more performance, thus the term bang it to buy it. One thing is certain, there were no fundamental changes yesterday to warrant yesterday's drop. So just remember, when things happen that don't make sense, you can bet something technical is going on. Lastly, let's just look at the long-term SPY charts. This pane shows from left to right the monthly chart, the weekly chart, and the daily chart. The longer-term charts show the SPY still in bull mode. So the last few trading days of the month are going to be interesting. If you like my video, please like it and share it with your friends. If you're watching this on YouTube, subscribe to my channel so you don't miss another riveting private briefing. So until next time, this is Doc saying trade safely and stay hedged.